Hello, welcome to Moneycontrol, and today I'm going to talk about an auto ancillary company which is leader in its space. The company's name is Bharat Forge. First, let me touch upon its Q3 numbers. Company posted a strong Q3 numbers, and its volume registered a growth of around 17.6% on a year-on-year basis. The growth was primarily driven by the pent-up demand coming from the original equipment manufacturer post waning impact of the semiconductor shortage. Apart from that, the high rich product mix has helped the company to register a 3.6% year-on-year growth in its realization. Coming on to the operating profitability, its EBITDA margin remained flat on a year-on-year basis, whereas it expanded by more than 100 basis points on a Q-on-Q basis. It is important to highlight that despite the macroeconomic challenges in various international markets, the company has registered highest ever export revenue. Now, moving on to the outlook, there are multiple factors that make us upbeat about the company. First, talking about the domestic business outlook. Post the waning impact of the semiconductor chip shortage, the production has improved by original equipment manufacturers, which in turn leading to the strong demand coming in for auto ancillary companies. Pent-up demand, preference for personal vehicle will continue to be key growth driver for the passenger vehicle segment. In fact, within the passenger vehicle segment, the management has indicated that the UV segment is expected to outperform, primarily on the back of customers' preference towards these kinds of vehicles. Now, moving on to the commercial vehicle segment outlook, the management believes the outlook is very positive on the back of government focus towards infrastructure, mining and construction activities, and the economy is completely opened up post the impact of the COVID. Now, moving on to the industrial segment demand outlook, the industrial segment outlook is very positive, primarily on the back of increased capital expenditure by various companies and the government. Now, moving on to the international market, international markets were marred by the severe shortage of semiconductor chips, but after the decline in the impact of the semiconductor chips, the production has improved quite significantly, and the management believes that the demand coming in from Class 8 trucks in North America is very positive. In fact, they believe that the segment can register a growth similar to what it has in calendar year 23, what it has registered in calendar year 2022. Apart from that, the Europe market continues to struggle in terms of passenger vehicle segment. However, the company expects to outperform on the back of increasing content per vehicle to these OEMs. Now, moving on to the new focus area that are very focused on that the company has been focusing primarily to improve the growth. First is their aerospace segment. The company has been focusing this segment to grow this segment. Apart from that, the company has been focusing on the defense segment and has got multiple orders from the government for supplying artillery, guns, ammunition, and etc. Apart from that, the company has also been focusing on the upcoming opportunities in the electric vehicle space, and in fact, it has bagged new orders from various OEMs to supply the electric vehicle part. Lastly, in terms of valuation, the company is currently trading at around 25.8 times FY24 projected earnings, which we believe is very reasonable for a company like this and the growth opportunity that the company has.